Hi, my name is Andrew Napurano, and today I'm going to be walking you through my capstone project, stock selection with machine learning, featuring analytical techniques to outperform the S&P 500 benchmark. So, really, the vision of this project, I want to empower investors with data-driven insights to outperform traditional benchmarks, replace human bias and emotion with a systematic based approach for selecting stocks. We want to bridge the gap between qualitative research and then actual practical portfolio management. And to do this, we're going to identify fundamental and technical indicators that can help predict company level outperformance using machine learning models to do so. And the data we're going to use to achieve this is a Postgres SQL database that takes data from an API. And we have over 700 S&P 500 firms over time. And our time period is mainly 2012 to 2025 with over 200,000 observations. And we're going to back test this model to ensure that, it's outperforming or at least performing well before we decide to select the model. Uh, if we look at the bottom chart, we could just see that based on 2004 to 2023, we had about a 10% annual return. Some years it's up a lot, some years it's down. But based on a SPIVA study and the pie chart on the right, 97% of publicly traded mutual funds underperform the benchmark. So that's a huge gap. If we could do a little bit better uh, than the market, that's a significant leap. And we could potentially create a technology that, could better investors' retirement accounts and really, create something robust and concise. And then our main research questions are, one, which micro and fundamental technical indicators influence company outperformance? Really, we have factors from the income statement, balance sheet, cash flow. And then two, what are the macro trends indicative of sector outperformance relative to others? Those are going to be our things like, CPI, GDP growth, market return, cyclical business cycles. And then three, if we could predict the probability of outperformance, can we actually beat it by a respectable percentage? There we'll be evaluating cumulative return, risk adjusted return, our risk, drawdowns, and then false predictions. We want to make sure if we're outperforming, we're not being too risky where the investor might be better off just holding the market, especially older investors that don't have a lot of time until retirement. They might need the cash now versus someone like me. I don't care if my portfolio goes down a lot in a year as long as it's up more than the benchmark. I have 40 plus years of investment time horizon. So, it's based on user needs as well. Uh, and then my literature research, so an interesting paper I read by Wolf and Ercherling in 2023. They actually showed that machine learning models can outperform the market benchmark. Their time period in particular was 1999 to 2021. And if we look at the bottom charts, uh, they're actually able to outperform using ensemble models and an average of their performance. So, uh, boosting, random forest, decision tree models, they outperform by 6%. So 14% on the S and no, 14% on their model and then 8% on the S&P. So 6% difference. So that's pretty substantial. Uh, and they had good results. I think just uh, what makes my project unique is I'm going to use my finance and accounting experience to really do more feature engineering and bring in a lot more of those fundamental and profitability factors into my model, which they did not have. And then also focus in on sectors. Uh, create something that maybe over a time series the model could recognize, based on certain macro factors, which sectors outperform, and then see if the model could pick up on that, which is something they did not do. So really, my project is more of looking at it at a different lens with also some data enhancements. and really just adding to the work, right? I feel like everyone has something they could offer, and that's why this research is public because it's good to be able to show things from a different lens. And then our data set is, curated Postgres SQL historical snapshot of S&P 500 constituents. Uh, we have 262,243 data points, 92 independent features, and a dependent target label. So outperform the market, one does not outperform zero. Really, I could break out my features into four different buckets: macroeconomic, microeconomic, financial information, and technical indicators. And all the data lives on the link below. Feel free to explore it. Uh, it's actually a SQL query that pulls everything into a data frame. And I actually do have something on my GitHub that shows you how to put the database together if you get the API. It's very easy. You can run script by script. I also have a README on it too if you're ever interested. And then my EDA, I really looked at four main performance indicators. So sales growth, how many sales is the company getting and is that growing over time? Positive performance, right, for those companies. We like to see sales. And then earnings growth. So all if they're growing sales, how are those sales falling to the bottom line? So are they actually profitable? And the higher the profitability, the better the company return. And we actually use a two sample t-test to verify that significance. And then momentum. So moving averages, just, how many days on average is your price above its average price over a rolling, 30, 60, 90-day period? The more that the price is above its average, the better those companies outperform, seeing on the charts on the right. Uh, and then relative strength index. So it's just an indicator for price movement, upwards, downwards pressure, which we could call overbought or oversold conditions. So actually, the more overbought and the longer it's above the upper range of the RSI, the better the company does, which makes sense because if there's high momentum and it keeps going up, likely those companies will keep going up in the future because the market likes them. The market's continuing to invest in them. It's not always the case, uh, but it is a signal. So it's something that might be good to give the model. Then really our methodology after our feature engineering, we're going to do a rolling 36 and 12-month training test split to predict company outperformance and feed it to several machine learning algorithms. So we have logistic regression, stochastic gradient descent, extreme gradient boosting, random forest classifier, and then a deep neural network. And we'll also do some principal component analysis to reduce the dimensionality of the data. Uh, Being that the data is very complex, we could see if we could simplify it and allow the model to read the information better and ultimately make better predictions. And then our machine learning pipeline, we're going to take data from the API. Apache Airflow will automate the ingestion process into Postgres. We'll take that data into Python, read it, do our labeling and data collection, pre-processing, feature engineering, model training, evaluation, and selection. If we outperform, model will be ready to deploy and put into a user-friendly application on Streamlit. If it does not outperform, we'll have to rerun it through the data collection and labeling process all the way through the end step. And then we have our sources, five different research papers that really help solidify my idea and learn a little bit more about previous work that has been done. The literature that I reviewed on these slides is actually in bullet two. That's the one that I felt like was the most thoughtful and really kind of had a similar methodology to what I have, where I was able to really learn, how has it been done before and what are the areas I can improve in my own personal project. Thank you. Let me know if you have any questions.